Best time to buy stocks on Cash App. Hey there, wondering about the best time to buy stocks on Cash App? Today I've got some essential tips that will help you make some smart stock purchases on Cash App and take your investment game to the next level. Also, if you haven't signed up for Cash App yet, you can use my link down below and we'll each get $5. First of all, let's understand stock market hours and how they affect prices. First things first, let's talk about stock market hours and how they can impact the price of stocks on Cash App. The US stock market is generally open Monday through Friday from 9:30 a.m. to 4 p.m. Eastern Standard Time. While you can buy and sell stocks outside of these hours, known as after-hours trading, the regular trading hours tend to see the highest volume of trades. During these peak trading times, stock prices can fluctuate rapidly due to the sheer volume of trades. Most active investors aim to buy during the market open, 9:30 a.m. to 10:30 a.m. Eastern Standard Time, when trading volume and price volatility are typically higher. But here's a little known trick. Buying stocks later in the trading day, especially around the closing hour of between 3 p.m. and 4 p.m. Eastern Standard Time, can sometimes offer you better entry points, as prices may settle and provide a clearer picture of market trends. So, evaluating pre-market and after-hours trading. The next point to consider is pre-market and after-hours trading on Cash App. These trading periods are outside regular market hours, from 4 a.m. to 9:30 a.m. and from 4 p.m. to 8 p.m. Eastern Standard Time, respectively. While pre-market and after-hours sessions can provide opportunities to buy stocks at lower prices, these trades often involve higher risk due to lower liquidity and increased volatility. If you want to take advantage of these times, you should monitor pre-market and after-hours news, as they can significantly impact stock prices. For instance, company earnings announcements often happen after hours, which can lead to price swings. If you're an experienced investor, you might find opportunities to buy during these periods. However, for beginners, sticking to normal trading hours might provide a safer, more predictable environment. The importance of market trends and news impact on stock prices. Moving on, let's discuss the importance of understanding market trends and how news impacts stock prices. The stock market reacts quickly to news, and keeping an eye on economic events can help you determine the best time to buy. Major events like Federal Reserve announcements, employment reports, and geopolitical developments can cause sudden price shifts. So, when should you buy? If the market is in an uptrend or bull market, it may be a good time to buy stocks, as prices are generally rising. Conversely, a bear market, where prices are declining, might present opportunities to buy stocks at a discount. By staying informed on the latest news and market sentiment, you'll be better positioned to identify ideal buying opportunities on Cash App. Keep in mind that major market news can affect certain industries differently, so understanding which sectors are most impacted can also be beneficial. Weekly trends. Why Mondays and Fridays are important. Let's now look at weekly trends and why Mondays and Fridays are often significant in the stock market. Historically, stock prices tend to be lower on Mondays, often due to the Monday effect, where traders react to news released over the weekend. This phenomenon can provide an opportunity to buy stocks at lower prices. Fridays, on the other hand, can be an excellent time to sell, especially if the market has experienced gains throughout the week. Some traders also tend to sell stocks on Fridays to avoid potential negative news over the weekend. As a result, stock prices can sometimes dip towards the end of the trading day on Fridays, making it a strategic time to buy if you're looking for discounted prices. By understanding these weekly trends, you can potentially optimize your buying strategy on Cash App, seizing opportunities when stocks are more likely to be undervalued. Remember, while these patterns can offer some guidance, they're not foolproof, and it's always essential to consider other factors. Monthly patterns and best times during the year to buy stocks. Next, let's explore monthly patterns and the best times of the year to buy stocks. There's something known as the January effect, where stock prices often increase at the beginning of the year as new investment flows into the market. This can be a great time to buy stocks, especially if you're looking for potential growth. Other times of the year, like the end of a quarter, March, June, September, and December, can also be ideal for buying stocks. Companies release their quarterly earnings during these months, which can create opportunities to buy stocks at lower prices if the market reacts negatively to certain earnings reports. Additionally, September is historically known as a volatile month for stocks, sometimes leading to lower prices. By taking advantage of these yearly patterns, you can identify the best times to make your stock purchases on Cash App. So now let's look at taking advantage of dollar cost averaging on Cash App. Let's talk about dollar cost averaging, or DCA, a smart and straightforward strategy that can be particularly effective effective when buying stocks on Cash App. With dollar cost averaging, you invest a fixed amount of money into stocks at regular intervals, whether it's weekly, bi-weekly, or monthly, regardless of the stock's price at the time. This approach allows you to build a portfolio over time while potentially minimizing the impact of market volatility. Dollar cost averaging can be especially beneficial if you're investing in volatile stocks or in uncertain market conditions. By consistently purchasing stocks over time, you end up buying more shares when prices are low and fewer shares when prices are high. This averaging out of purchase prices can lower your overall cost per share, reducing the risk of making a single large investment at the wrong time. It's a disciplined approach that takes emotions out of investing and encourages steady growth, which is ideal for long-term investors. Cash App makes it easy to set up recurring purchases, allowing you to automate this process and build your portfolio without constantly monitoring the market. You can customize the frequency and amount of your investments to fit your budget and investment goals, helping you stay consistent even during market downturns. Over time, dollar cost averaging can help you accumulate wealth gradually and potentially increase your returns by leveraging the power of compounding. While DCA doesn't guarantee profits or protect against losses, it provides a systematic way to invest and can be particularly effective for those who prefer a hands-off approach. By taking advantage of this strategy on Cash App, you can steadily build a diversified portfolio while mitigating some of the risks associated with market fluctuations, evaluating stock prices with technical analysis tools. Now let's dive into technical analysis tools available on Cash App and how they can help you make better investment decisions. Technical analysis is a method that involves studying charts, patterns, and indicators to forecast future stock price movements based on historical data. For investors on Cash App, understanding these tools can be a game changer as they provide insights into market trends and potential entry points for buying stocks. One of the most popular technical analysis tools is the moving average. This indicator smooths out price data to help identify the overall direction of a stock. By analyzing short-term and long-term moving averages, you can gauge whether a stock is trending upwards or downwards and spot crossover points that may signal buying opportunities. Another essential tool is the Relative Strength Index, or RSI, which measures the speed and change of price movements. RSI values range from 0 to 100, with levels below 30 indicating that a stock is oversold. When a stock's RSI dips below this threshold, it may suggest a good buying opportunity, as a stock could be undervalued and poised for a rebound. Bollinger Bands are also popular among traders. They consist of a moving average line with two standard deviation lines above and below it, creating a band. When stock prices move toward the lower band, it may indicate an oversold condition and a potential buying opportunity. While Cash App provides access to some basic charting tools, learning how to interpret these indicators can give you a better sense of timing and help you make more informed decisions. With a solid understanding of technical analysis, you'll be better equipped to navigate market fluctuations and optimize your buying strategy on Cash App. So, the role of earnings announcements and how they affect buying opportunities. Let's not forget about earnings announcements and their influence on stock prices. When a company reports its quarterly or annual earnings, it can significantly impact the stock's price, often causing sudden and sometimes dramatic fluctuations. Cash App users should be mindful of these earnings dates because they can create unique buying opportunities. During earnings season, companies release detailed reports on their financial health, which can include revenue, profit, loss, and growth forecasts. These factors directly affect investor sentiment and consequently the stock price. If a company's earnings report falls short of market expectations, even by a small margin, the stock price can drop as investors react to the news. However, this doesn't always mean the company is in trouble. Sometimes these dips occur due to temporary setbacks or market overreactions, which can create potential buying opportunities. If you believe the company's long-term fundamentals remain strong, you might be able to buy the stock at a discount right after an earnings report. On the other hand, if a company reports positive earnings, the stock may surge, but that doesn't necessarily mean it's the best time to buy. Prices may be inflated from investor enthusiasm, so waiting for a post-announcement pullback could offer a better entry point. By tracking earnings announcements and analyzing how the stock reacts, you can make more informed decisions about when to buy on Cash App and capitalize on potential opportunities. And there you have it. Now you know the best times to buy stocks on Cash App, from understanding market hours to leveraging earnings announcements. Use these strategies to make informed decisions and maximize your investments. Now, Don't forget to like, share and follow for more tips. Also, by the way, if you haven't signed up for Cash App yet, you can use my link down below and we'll each get $5. Take it easy. See you next time. Bye.